Hello everyone. Today, we are going to learn chapter audit-related services and non-assurance services. Auditors report to audit special circumstances. Special purpose audit. First, consideration when accepting the engagement. Second, consideration when planning and performing the audit. In consideration when accepting the engagement. Firstly, acceptability of the financial reporting framework. The auditor should obtain the purpose for which the financial statements are prepared, the intended users, the steps taken by management in order to determine the applicable financial reporting framework is acceptable. Secondly, preconditions for an audit. It is to establish whether the preconditions for an audit are present and to obtain the agreement of management that is acknowledges and understands its responsibility to include all informative disclosures, in consideration when planning and performing the audit. Firstly, objectives of the independent auditor and conduct of an audit accordance with generally accepted auditing standards. It requires the auditor to comply with all IUC sections relevant to the audit. Secondly, understanding the entity and its environment and assessing the risks of material misstatement. It requires the auditor to obtain an understanding of the entity's selection and application of accounting policies. There are 4 categories of attestation services. First, audit historical financial statements. Second, effectiveness of internal control. Third, review of historical financial statement. Fourth, other attestation services. Assurance level for related services. There are 3 levels of assurance that auditor can perform, which are audit, reviews, agreed upon procedures. Each of these engagements have different levels of assurance, with audit offering the highest and agreed upon procedures the lowest. Due diligence is a process of inquiry and investigation made on behalf of the prospective business person. It is to verify the state of affairs of the targeted business. The procedures involved are the same with the statutory audit procedures. Forensic auditing. This is often conduct to obtain or develop information as legal evidence or for use by expert witnesses in the court of law. This requires the use of critical analysis and investigation skills together with accounting knowledge must be trained in detecting, investigating and deterring fraud. It is examined into the financial affair of the business, even examining the prior audit report in order to gain information. The stages involved are 1. Obtain instructions from clients such as letter of engagement. 2. Communicate with auditors to gain information and as a professional courtesy. 3. Assessing the aims of the investigations in order to check if it can achieve and covered. 4. Obtaining background information in order to understand the current situations. 5. Deciding the outline of audit report. 6. Fact gathering is where the auditor compare and analyze data. 7. Drafting the audit report. 8. Clearing the draft report with the company being investigated in order to eliminate any minor and inaccuracy or avoid disputes.
Non-assurance services. Non-assurance services are the types of services that are provided but does not increase the level of confidence in the validity of the factual findings report. There are 8 types of non-assurance services. The first one is consultation. Consultation is where the management provide advice to the client either verbally or in writing. For example, management provide consultation regarding the client's acquisition of a company. The next one is secretarial services. Secretarial services is where services provided in term of incorporation of new company and other service is the maintenance of statutory books and registers. Next is agreed upon procedures. Agreed upon procedures is where the auditor provide factual findings, however does not offer any opinions, conclusion or assurance in the final reports. Compilation. Compilation is where auditor collect, classify and summarize financial information, however does not provide technical advice and will not assess or verify the reliability and completeness of the information. For example, the preparation of accounts and financial statements.
Review of financial information. The auditors will provide moderate level of assurance since it does not involve assessment of accounting and internal control system, test of records and other procedures. There are 8 procedures the auditor must do in order to review financial information, which are: 1. Obtain an understanding of the business and industries. 2. Obtain understanding of the accounting system and nature of the entity's assets, liabilities, revenues and expenses. 3. Inquire entities' personnel that are responsible for the financial reporting. 4. Inquire the actions taken at the board's meeting. 5. Perform analytical procedures to identify any individual items that are unusual. 6. Read the financial statement to determine if they comply with financial reporting framework. 7. Perform certain level of audit techniques for every balance sheet items. However, there is no need to get confirmation from third-party or physical observations. 8. Obtain written representations from management for all matter including subsequent events. Review engagement. The auditor will then issue a report in the form of unqualified review report which states, based on our review, nothing has come to our attention, or qualified report if not persuasive effects that states, based on our review, except for the effect of overstatement of inventory, nothing has come to our attention, or an adverse report of persuasive effect that states, based on our review, because of the persuasive effect on the financial statement, the accompanying financial statement are not presented fairly. Examination of prospective financial information. Prospective financial information is a financial information based on assumptions about events that may occur in the future and possible actions by an entity. In an engagement to examine prospective financial information, the auditor should obtain sufficient appropriate evidence. In the case of hypothetical assumptions, such assumptions are consistent with the purpose of the information. It is properly prepared on the basis of the assumptions. It is properly presented and all material assumptions are adequately disclosed, including a clear indication as to whether they are best estimate assumptions or hypothetical assumptions. It is prepared on a consistent basis with historical financial statements, using appropriate accounting principles. Taxation. The audit firm will do the compilation of return on behalf of the client. They also provide advice on tax planning and exchanges on the tax rate.